All right. Good morning, everybody, and welcome to this week's bi-weekly podcast here at Gentian Financial. We want to welcome you to the podcast today. Thank you for taking time out of your busy day to spend time with us today. People do say happy tax day, and I'm not quite sure this is the happiest day that we say that because it is tax day, and a lot of us end up owing probably some money one way or the other. So, but it is tax day today, April 15th, and we're going to be talking about the tax return in general. It says quite a bit about what we're doing financially, and it's our way as planners and your guide to really understand what you're doing and really identify some opportunities for you and your planning and your family to really help optimize what we're trying to accomplish together. So we're going to be talking about the 1040 tax form today, or just taxes in general as well. So you'll see a couple examples come up. We have a great team here. I'm grateful for the team that's here today. Grateful for the whole entire Gentian team that shows up every day to help serve you and guide you and your family. So grateful for all of you guys. I'm also going to ask Peter. Peter, what are you grateful for as well?
Thanks, Ken. This morning, I'm very grateful that even though our toddler handled it very well 2 nights ago, there was not a 1:40 a.m. tornado siren that went off in Cedarburg last night. So that was a nice surprise given what the weather looked like, and also grateful that she's starting to understand what thunderstorms are. So she's starting to not be quite as afraid of them, even though when those loud booms come, I think it jolts all of us.
Yeah, for sure. Thank you, Peter. Appreciate that. Yeah, that was a jolt to the system at 1:40. The alarms are going off on the phone. Had to get the families in the basement. So even at 46, I'm gonna be 46 this year, Peter, and I'm still scared of thunderstorms. It just never goes away, right? So just joking around. But Angie, how about yourself? What are you grateful for?
Ken, I'm actually grateful that I got my taxes done way back in February. So now today I can just sit back and not have that anxious feeling of getting that done. I'm a preparer, so I like to get things done quickly. I'm a planner, so I'm just glad that's done and over with.
Well, that's why you fit well with the team. Being a planner there, I like that. Early to the game, right? That's wonderful. You don't have to procrastinate. That's awesome. So, Zach, how about yourself?
Yeah, thank you, Ken. Always grateful for a lot of things today. I'm just extremely grateful for my wife. She's just an amazing person. We're on a similar mission in life of just serving others in any way we possibly can. And she hit me with a really good one this morning, and it's the acronym of HOPE, HOPE, and it's help one person every day. So that was a really nice one. She was listening to a podcast. She's like, "Hey, you got to hear this. I know you love that." So I'm grateful to be on this journey of life with somebody that we're very, very aligned on a lot of different things, but especially when it comes to serving and helping others.
Good to hear that, Zach. So I need lots of help. So I can't wait to see what you do for me today. So that's just kidding around. But Michael Birchbach, how about yourself?
Thank you, Ken. Lots to be grateful for today. Like Angie, I'm actually also a planner, but really thankful for modern technology. I think it's actually pretty insane to think about the fact that more than 24 hours in advance, we had a pretty good idea of the potential storms coming through, and then also all the different methods of communication to let people know to be safe. And historically, it's been the alarms, but a few teammates also mentioned their phones ringing and just the ability to get to safety and get to shelter, I think, and when you think about it, is actually pretty incredible. So thank you.
Yeah, Michael, thank you very much. It is incredible to try to keep. They do a great job. The sirens go off, the phones go off, and they think they're trying to do everything in their power to make it as safe as possible. So we appreciate that. So, as Albert Einstein, I think that's everybody. Did I miss anybody on the Gentian team? Oh, I can see so many, but I don't want to exclude anybody. Everybody's. But Albert Einstein really said it best. He said the hardest thing in the world to understand is the income tax. And so, what we're going to do here is try to demystify some of those things that you may hear, some of those things that you see. Sometimes we go through the tax returns. We know that you go through them, line by line with your accountant. Sometimes you don't. You just kind of you put the information in, you see if you owe or not, or you get a refund. That's really kind of the gist of sometimes when you look at returns. But today, we're just going to help try to bring to attention some of the items that we pay attention to for you. And we pay attention to a lot. There's a few items on your tax return that we really, really are in tune with, because it really guides a lot of the planning that we do, whether it's trying to get deductions, whether it's charitable donations we're trying to do, whether it's trying to figure out interest planning, interest you make on your cash, deduction planning, things of that nature. We're really trying to figure out, actually, conversion planning is a big one when it comes to tax planning as well. So understanding your gross income versus your taxable income. These are all very, very important pieces, because it also plays in to Medicare planning and IRMA and net investment income. Everything is intertwined and has a lot of overlap and parlays into each other. So it's kind of a dynamic. I know it's one thing you do per year, but it's a very dynamic thing that we talk about as far as taxes goes, and really what we can put in help to put more in your pocket rather than the IRS's pocket at some point in time. So with that being said, let's kick this off. Let's talk about taxes and deductions and all that good stuff that goes along with that. So Peter, how about yourself? What do you have for us today?
Yeah, thanks, Ken. I'm going to quickly touch on deductions, since that's such a very popular topic that people like to discuss. However, it actually doesn't apply to as many people as we think, because if you're taking the standard deduction, then itemizing and the deductions that we talk about a lot aren't going to apply to you. And there's been a lot of changes that make it easier for some people to itemize and harder for some people to itemize. So 2025, they were actually anticipating more people taking the standard deduction due to the 8% increase in that. And then there was also a brand new $6,000 senior deduction added to the standard for anyone over the age of 65 for 2025, 2026, 2027, and 2028. It does have income phase outs, but adding that on top of the already higher standard deduction means that looking to itemize doesn't make as much sense for some people. So some of the planning items, such as charitable deductions and other things that typically might be itemized, aren't going to be as big of a tax benefit. So a couple of things that we take a look at is, does it make sense to stack some years? Do you maybe lump 3 years of charitable deductions into one, so that you itemize that year and take the standard the next two? Or now with the increase in the SALT deduction to potentially being up to $40,000, depending upon your income level, from the 10 that it was, do we stack property tax payments? There are things that we can do strategically on an annual basis to kind of play with the standard versus itemized deduction, because it's really the one strategic decision you can make that impacts how much you are paying in taxes on an annual basis. Those are just a few examples of what goes into there. There's HSA contributions, there's pre versus post-tax contributions. But those are the biggest things to kind of take a look at of, do the items that come into itemizing actually impact your tax picture, or are you just taking the standard deduction?
Very good, Peter. Hey, we appreciate that. That's really great. So a little later on in the program here, I'm going to pull up a 1040 and show you where some of these items fall that Peter is talking about, is the standard deduction, or if there's itemization going on, and really how that affects. I'll show you where that extra senior deduction shows up on your taxes as well, that we've seen a couple returns now as well. So Peter, really appreciate your input there. Thank you very much. All great stuff. Zach, how about yourself? How about a little bit of markets and some tax stuff for us, please, today?
Yeah, thank you, Ken. I'll just switch gears for a second. We were going to keep it completely focused on taxes, but I felt like I had to touch on the markets just a little bit here, because I'm sure all of you paid extremely close attention 2 weeks ago during the webinar on April Fool's Day, and all of you that watched this after took a lot of notes on that. But the main message of that is that the best days of the market often follow the worst days, and usually the return occurs after or during peak fear. So not to say that we don't have a 20% correction from here, because that's normal and necessary for the long term, but just looking at the different indices and kind of comparing them from the last 2 weeks as well. So the Dow Jones up 1% on the year, which is 4% increased just over the last 2 weeks. The S&P 500 is up to almost 2% positive on the year, and that's a 5% increase in just 2 weeks. The NASDAQ, which is 50% weighted towards technology, it's up around 2% as well now on the year, which is up 9% in the last 2 weeks. So almost double-digit recovery in the technology space over the last 2 weeks. And the Russell 2000 is up about 10% on the year, and this is where we saw one of the biggest increases. That's up 10% in the last 2 weeks, and those are those smaller sized companies. International up about almost 7% on the year now, and a 7% increase from 2 weeks ago. And then emerging markets takes the lead for the biggest increase in the last 2 weeks. And year to date, as far as the highest return, it's up almost 11.5% and 11% gain just in the last 2 weeks. So it was almost perfect timing of just talking about the best days often follow the worst. We were at kind of peak uncertainty 2 weeks ago with everything occurring in Iran, certain comments that were made across the industries. And that's when the best return of the year came so far. So we're always going to go through this cycle of 5, 10, 15, 20% corrections, but it's awesome to see in the short term when there's a quick recovery like this. So just extremely exciting for us to see, and kind of then flowing into taxes, just going through some of the actual forms that I think are really interesting to take a look at, because we hear terms thrown out there like the 1040, tracking IRA contributions, and it's all extremely confusing. So just wanted to kind of highlight some of the top ones. The 1040 is the most common one. That's the one that we oftentimes work the most off of too, for the ideas that Ken talked about, like conversions, tax loss harvesting, all of those great ideas. And we can really think of that as just the 1040 is just your personal financial summary that you submit to the IRS every single year. Then there's the Schedule C. It shows how you made your money, whether it was, W-2 income from an employer, 1099 income. Then there's the Schedule 1, which is adjustments or the extra stuff that doesn't necessarily fit on that 1040 page. And it's above the line deductions, and that changes your income, or changes to lower your income that's actually taxed on. So this is like student loan interest, HSA contributions, deductible IRA contributions. Then we have the Schedule A, which is corresponding with what Peter talked about, and this helps track the deductions, whether it's mortgage interest, donations that you have, and kind of helps kind of highlight whether we do take the standard deduction or if we do have enough to itemize above and beyond there. Extremely helpful for us to see if we're really close. Maybe that's where a donor advised fund or some charitable giving in a different way makes a little more sense. Schedule D, D is in dog, that's really the investment taxes. It tracks gains and losses from selling stocks or other investments that you have out there. And then two that I wanted to highlight that come up quite often when it comes to our IRAs, or individual retirement accounts, Form 8606. If you've made non-deductible IRA contributions, say that you make too much money sponsored by an employer plan and you can't actually deduct what goes into your IRA, maybe you make too much money to put into a Roth IRA, it keeps track of those dollars and it shows that that money has already been taxed on, and it's a terminology called the basis in there. And it's extremely important because if you don't track that, or your accountant doesn't track that, and then you later on take money out of your IRA, the IRS is going to view that as all of it coming out as ordinary income, whereas if that basis comes out of there, it comes out pro rata. So that's an extremely important one that we look at. And then the last one, just wanted to highlight, is Form 5498, and that helps show what exactly you contributed to your IRA in the year. It's extremely important if you're under the age of 59 and a half and have contributed to a Roth IRA, because the Roth IRA has distribution ordering rules. Contributions come out first, then conversions, then your earnings. And that 5498 is extremely important to show exactly what your contributions have been. We had a scenario recently where somebody had an emergency and had to take out of their Roth IRA. They've been contributing to a Roth IRA for the last 20 years, and we had to get all of those Form 5498s to see exactly what our contributions were. So those are some of the bigger ones. There's obviously others if you're self-employed and things like that, but just wanted to share that, and hopefully brings a little bit of light to your tax return when you take a look at it. Back to you, Ken.
Thank you, Zach. Appreciate that. A lot of schedules, a lot of stuff being talked about there. I'll bring the 1040 up a little later and show you where some of these kind of fall into place and what we're looking for there as well. And so you could help understand your tax return a little bit better than hopefully you did before. So it reminds me of, for all you comic, your Marvel fans out there, here's kind of a funny little joke, I think. Spider-Man pays the least in taxes. Why? His income is all net. And that's really that's right there. That's the joke for the day. And also I heard this one the other day too. When you're a kid, you think that adults have the money. And then you grow up and realize that the IRS has the money actually. So just kidding. There's some funny jokes for taxes today. So Yes, that's all fun stuff. And Zach made a good point about the markets. Just to really touch base on, I know this is a tax podcast today, but again, plan driven. Make sure we really have that in the back of our minds, actually in the front of our minds, is let's be plan driven. Let our decisions be driven by our plan that we've created together. That's really the key when things get uncertain and we have some volatility in the market. Again, let's be plan driven. Let's not let our emotions drive our decisions. So I can think of a couple times in my life where I got emotional about something and I made a decision. And looking back, was it the best one? Probably not at the moment, but I was charged up and ready to go. But if we really let our plan drive our decisions, we are going to have typically a pretty good outcome when it comes to that. So just want to touch base on the Planet Live It Give It part of Gentian as well. So Michael Birschbach, how about yourself?
Thank you, Ken. Today, I just want to take a break from some of the kind of the technical knowledge and just go over a few common misconceptions we hear when it comes to this time of year. So, a good analogy that I like to use for a tax return is think of it like a utility bill, where each month you're paying the average use of however many watts or however they're measuring it, and they're charging you that bill monthly. And then at the end of the year, you essentially look back and say, here's how much power I actually used, and you settle up. Sometimes you may owe more, sometimes you may get a refund back. Very similar when you think about it from a very high level, but the three big ones that we hear, I should hear at Gentian, the first one being, I want a refund because it's free money. It's not technically true. It's just money that you paid throughout the prior year when withholding or taking out of your paychecks, whatever it is. It's just money you're getting back because you actually overpaid. Now, the second one that we hear a lot, or sometimes that people can feel, is that when they owe money at tax time, something bad happened. That's not necessarily the case. It just means that your withholdings or estimates may be a bit low, or maybe throughout the year there was a surprise that came into play. Maybe you got a big bonus in December. Maybe you received an inheritance and some other things came into play, which were difficult to plan for, but it's not necessarily a bad thing just because you owe at tax time. The third one, a lot of people feel that they're going to be in a lower tax bracket when they get to retirement, just because they're not earning as much money through W-2 or their earned income through their job. Social Security, pensions, IRAs, all of that income adds up extremely quickly. And we're not even mentioning if you transition into retirement and work part-time or have a lot of taxable assets that create investment income. So it's not necessarily always the case when we're looking at tax brackets today versus tax brackets in retirement, which is a big part of the planning discussions that we have. So three big misconceptions there. Now, one thing I want everyone to kind of consider would be is, are you actually loaning the government money for free? If you're getting a very, very large refund each year, you're over withholding. So that's an interest-free loan that you're essentially giving to the IRS throughout the year that you're waiting to get back when you actually file your taxes and get that refund. So if you want to talk to your CPA or have a conversation with us about optimizing that withholding, so we're not necessarily giving that interest-free loan, more than happy to talk with you. A lot of people's financial planners and tax preparers don't communicate. This can leave some opportunities on the table. So if you do work with a CPA and you want us to connect, please reach out to us. Let us know. There's a form that we have to set up to make sure that we can disclose information back and forth. But this is the kind of the coordination that we're looking for to have with our clients to make sure that we're doing the best planning for them. Back to you, Ken.
Michael, appreciate that. That's very good stuff. So yes, the refund versus owing, and sometimes owing a little bit is actually one of the. If you're trying to get to zero, is like the perfect return, right? We don't owe anything. We're not getting anything back. It literally comes out to zero. I saw one that came within $2. That's the closest one I've seen so far as federal tax withholding is $2 getting back. That's virtually a really good tax return at that point in time if we're trying to optimize one way or the other. I know some of you like to get a refund. It builds that cushion in a little bit where we don't get a surprise bill at the end. All of a sudden, hey, we owe 1,000 or 2,000 or three, and it really can take us back and kind of shock us a little bit. But sometimes getting that refund, some people use it for vacations, or some people use it for savings or some home repairs. But we know we're probably going to get a little extra. Some people like that cushion. But Michael, you're absolutely right. Trying to get to that zero mark is really the perfect return. So What I'm going to do now is, before I bring Angie on for the Gentian Happenings, we're gonna finish with the Gentian Happenings with Angie on our team here. I'm going to bring up the 1040 like I was talking about before, show you a couple pieces here. Try not to get too complicated with this, but really just kind of go over a 1040 tax return that you probably see, and just to go through a couple pieces here. So here on your screen, if you're with us on a computer or your iPad at home, if you're in the car listening to this, it's going to be hard to see this, of course. But what I have up in front of everybody right now is a 1040 U.S. individual tax return form from 2025, the ones you just filled out, or you're doing it today, or there's an extension. I guess it kind of depends on your situation. But what I'm going to do is I'm going to drop down here to where we start inputting like information on what's happening in your world when it comes to taxes. So there's lines 1 through, I think, 38 it goes up to. Yeah, 1 through 38, as you can see on the screen there. I'm going to start with number 1, of course. If you're working, you have W-2 wages. This line 1A is where your wages will go. So there's 401k deductions that get factored into this. There's health insurance premiums that get factored into this. But this is where your working wages go. That when you get your W-2 from your employer every year, you punch in the number. This is where it ends up. When you start to look and you kind of move down the tax return, I'm not going to hit every line, of course, but I'm going to hit a few highlights here. Otherwise, we'll be here for like 3 hours, and I don't think you want to be here with me for 3 hours talking about the tax return. So you probably have better things to do with your life. I know you hire us to do this part. So I'm just going to give you a few highlights here, and I'm not going to take up your whole day talking about tax returns, because we could. There's one area I really like to talk about, because it's something you can figure out and really solve for someone. So take a look at this. The next one comes the interest. So lines 2 and 3. This is where we see numbers pop up for you if you have a personal account or a trust account or money at the bank. This is where it gets reported as taxable interest here on 2B. And there's also, you have dividends, and some of them are qualified, some of them are ordinary. If they're ordinary, they're a little bit higher tax. If they're qualified, they're a little bit lower in tax as well. So that's where they show up as far as 2B and 3B. To be or not to be, I guess, is the question. That's what I heard. I'm just joking. Trying to have a little fun with you all on the podcast today. So then comes IRA distributions. This is a big one. A fair amount of you take money out of your IRAs either through required distributions or through conversion planning. This is where it shows up if we are intentionally take money out of the IRAs on purpose through Roth conversion planning. It shows up here on line 4A. If you're taking money out because you require distribution, it also shows up here on 4A as well. So we don't audit tax returns by any means, but we certainly review them with you. I caught 3 errors so far for clients that have shared us with us. It's not that they're fault of their own at all. It's just, it's complicated, and it's like, did it show up? Did it not show up? And so this is where we like to review them. So when you do your taxes, and we know your scenario really well, and we think that there should be something in line 4A and there's not, we bring it to your attention to make sure that, hey, what's going on here? Let's double check our work here. So then comes the taxable amount, which shows up in 4B. If you did a rollover, 1A, of course, check there. If you did a qualified charitable distribution, I think this is new this year on the tax return. I don't think it was there last year. There's actually a box showing that, did you do a qualified charitable distribution with some of your IRA money that you took out? And so now there's actually a box that gets checked there. And of course, that's a non-taxable thing. So again, what shows up on 4B is your taxable distributions there. 5A, pensions and annuities. If you get a pension, like a monthly check from your previous employer, this is where it shows up as well. Social Security, this is a big one, 6A. There's going to be your gross number shows up in 6A, and then it depends on how much other income you have that you show will determine what B is. 6B over here, what actually shows up on the taxable portion. So sometimes you see a benefit of like $50,000 and only like 10,000 shows up on 6B. That's because not all of your Social Security was taxable. When all of your Social Security is taxable, it's 85% of whatever the 6A number was. That's what shows up on B if all of your benefit is taxable. So again, we're going to kind of get in the weeds on this, but it's all fun stuff to us. Hopefully you're still enjoy following along with all this. 7A, capital gains. So if you have a personal account or a trust account and there was distributions or there was something sold throughout the year that was a gain, that shows up on 7A. You also, if you have a loss or a loss carry forward, sometimes you see parentheses on your tax return. That means it's a negative and actually is being deducted from your overall income. So 7 is really important as well. Line 11A. This is what we ask for once in a while when we're asking for numbers off your 1040. If you don't have it in front of you, some people are like, hey, you know what does line A say? This is your adjusted gross income. This matters. This number matters a lot when it comes to Medicare planning. So Medicare premiums are based on adjusted gross income, whereas some of the other pieces that we talk about are based on taxable income. Isn't that confusing? Why would that happen? Why would we look at just one version of taxes versus the other version of income? And next thing you know, that determines 2 or 3 different things that we're looking at. That's why Albert Einstein said it's the most confusing thing to understand in the world, is because it is. Sometimes it doesn't make sense. That's a line 11A. Dropping down here, 11B, of course, if you have other scenarios here. And then come the standard deductions. Peter talked about this, 12E right here. So either you have a standard deduction, which is somewhere between 32 and 35 to 36,000, depends on your scenario and your age. That shows up there. Otherwise, you have itemization going on in the background. If you have medical expenses or the SALT deduction or mortgage interest. So if your itemized is bigger than the standard deduction, that goes there. Otherwise, the standard deduction gets slid in there. The additional deductions, the senior deductions that we talk about here, 13B, that's where they're going to show up. And the max you can get is $6,000 per person for 25 tax year, 26, 27, and then, of course, 28. This is where that additional deduction will show up. So some of you have deductions of $40-some thousand, which is incredible, because then all of a sudden you get to line 15, and this is your taxable income number. This is what we're paying taxes on, actually, on your taxes when it comes to your income. Line 15. So sometimes we ask you what 11A looks like because it's your gross income. Then we ask you what line 15 looks like because it's your taxable income. And this really guides us from a tax bracket standpoint, tax bracket management, family wealth management. Guys, there's so much to talk about when it comes to taxes, and we're trying to truncate this into 30 minutes today. So if you have questions, if you want to chat about something, talk to your advisor, talk to us, email us, ping us. We're here to help you guys out. So, and then of course, your total tax that you paid in, or actually what your total tax is on your overall income. Then you kind of drop down, say what you paid in and whether you're getting a refund or whether you owe. That's the last few lines on there. So hopefully that's helpful for everybody. I know it's pretty quick, but the purpose is to try to walk you through some of the things that we look at and how to help you and your family really optimize what you guys are trying to accomplish individually. So I'm going to pause now for a little bit. I'm going to hand it over to Angie on our team, and she's going to tell us all things Gentian Financial right now. What's happening, Angie?
Hey, Ken. Thank you. Yeah, I'm going to fill you guys in. Lots of save the dates. So future things to look forward to. So I'll just be throwing those dates out in a minute here for you to keep those on your calendar and join us later here in the summer. So coming up Thursday, April 30th, we do need volunteers for our Gentian Volunteer Day. It's going to be at the Domes, again, the Milwaukee Domes. This year, we do have an RSVP, which will be in your bulletin and also on our website. So that will be, again, April 30th. It's a Thursday. It'll be from 10 to 12. And then we're going to have a tour of the domes afterwards and lunch as well. So please feel free to join us for that. Our April birthday club is coming up. That's going to be next week, Wednesday, April 22nd. Please RSVP by today so we can get an accurate count. We do have a lot of April birthdays. So we are counting on a large crowd for you to come and join us and have some conversation and a great lunch with all of us and our fellow Gentian family members. On May 13th, that'll be our May birthday club. If you are unable to make the April birthday club, feel free to join us in May. We will have our link open for that shortly after the April birthday concludes. So just watch for that. We do ask that you have your RSVP in by May 6th. But again, we will send that link out shortly after the April birthday lunch concludes. Now, here we go with the save the dates. We're going to go all the way through September, so keep these on your calendar, subject to change. But as of now, ladies and gentian, will be May 27th. Topic to be determined. The ladies and I are going to come up with something fun for us. So that's going to be on Wednesday, May 27th. The June birthday club will be June 17th. That's a Wednesday. Again, if you're unable to make it during your birthday lunch, feel free to join us the month before or the month after. We would love to celebrate you. Kids Finance Camp. That's going to be Wednesday, June 24th. Details to follow on that. We do have some things available right now on that, but nothing in stone. We do have the date, so feel free to join us for that 9:30 to 1. And then the Shred and Eat Outside Day is going to be Wednesday, September 16th. That will be at the Doty Family Farm, where it has been for the last couple years. That's always such a great event for everyone. It's so enjoyable. It's personally my favorite event. It's great to be outside, experience the farm, just have lunch with everyone, and feel like you guys are getting yourself cleaned up of all the stuff that you want to get rid of in your home. So again, that's going to be Wednesday, September 16th. So lots of save the dates. You can find these dates in your bulletin and on our website. So if I went a little too fast or that was a lot being thrown at you, feel free to hop on our website. There's a lot of great information out there.
Angie, thank you very much. We appreciate that. Lots going on here at Gentian, not a shortage of events, and we look forward to seeing you at the next one. So we want to thank you very much for today. Thank you for taking half hour of your day this morning to spend with us. Hopefully you've learned something about taxes or reconfirmed or reassured yourself of what you're doing. Again, we always say, please talk with your accountant on some of these topics as well. It's a tax form, so please consult with your accountant. Again, we like to review things. We'll give you ideas. But just making sure everything is taken care of for you. So on that note, we want to say thank you very much for being a member of Gentian. We appreciate you very much. We appreciate the introductions you give to us, that people you care about, that you feel would benefit from the services that we provide here as well. So we want to thank you very much here from Mequon, Wisconsin, Gentian Financial, the entire team here at Gentian. We just want to say thank you very much. We appreciate you, and we'll see you in 2 weeks. Thank you. Bye-bye.